Well, hello, everybody in the private community. Welcome to, of course, our Wednesday session. And it's a big week this week. We've got quadruple witching hour. We have the FOMC. And for some reason, we're very festive ahead of Christmas, aren't we, Tyrone? How you going, man? We're wearing the red hats. We're ready to go.
We're wearing the red hats, and I'm not even sure why we're wearing it in our webinar tonight, because this is not our final webinar for the year. Next week is our final webinar for the year. But hey, you know what? I think if we bring these hats to the party, maybe the Christmas rally will start. So what we are trying to do is actually push forward and see if we can get some pips for everyone. I'm looking forward to tonight. We've got a lot to cover. And I think we're starting to set up some pretty reasonable moves on some of these majors. So looking good.
Yeah, I think it's looking pretty okay. So we've got some big volatility that's going to come in over the next couple of days. As we mentioned, the quadruple witching hour, all the weird red news. Let's just have a quick look at the news together here, Ty. So we've got the FOMC statement. We've got CPI CAD. We've got USD core retail sales. My goodness, it's all coming out. FOMC press conference. And then look at Thursday. I mean, if you're looking at this, we've got SNB press conference. We've got PMIs. We've got monetary policy assessments. It truly is a super event of big Forex news as well coming out. And then we've got the quadruple witching on Friday. So look, it's a week of volatility. We know this, but there are ways of navigating around it. And sometimes the best navigation is just to chill back and wait for the direction of what we're going to see next. Now, dollar index will probably be the best one to start with here, I think. We'll just quickly go through the currencies. It's going to be tough to trade currencies. There's quite a lot of trapping going on. We'll look through quite a few. Then we'll go into our commodities discussion, our stock market discussion, and of course, our crypto discussion. We've got some sectors to look at as well at the moment, because as you would know, we love looking at sectors quite a lot on the channel. It's actually one of Tyrone and I's favorite things to do. The sectors are something we dearly love, and we like them for good reason. And it's just due to stability, due to quality entries, and due to, of course, less fake breakouts. That's what we like to see. Less fake. We don't want fake outs. We want real breakouts. So here we have DXY, and we've got a lot of rejections. We've got the long leg doji. We've got the rejection candle over here. We have the indecision, and we've just tested the 96.60 high and sold off a little bit from that point. Now, if we get a weekly closure above here, I don't need to tell anyone in the community what that does for our confidence in the bull side for the dollar index. Of course, that would be pretty much snapping off two of the recent highs. It should lead to further follow through and some strength coming in here. The more it rejects, the more big that event is going to be if it does occur. Now, if we move over to a couple of currencies, let's go and have a look at the euro. Well, what do we expect from this one? We expect it's trapped at this stage. We go into something like the daily and look at it and we think, well, this is all a bit of boringness, isn't it? And Tyrone, I think that's kind of the thought process I've got here is the 20 moving average is holding the euro back for now. But we breach above, especially once we breach this 113.80, should we do it? It's going to be a big deal. What are your thoughts if that does happen? Or the reverse, it goes underneath again.
I like it. I like it. I like what the dollar index is doing. And I like what it's going to do to the euro. So I'm doing the webinar from home today for the first time in a very, very long time. And I've got my little man here wants to say hello to everyone. He thinks that Thomas and I are movie stars. He sees us on TV on YouTube all the time. They can wave their rating that you are on TV. You can say hello. So there you can go up and be quiet. So off you go. He's been wanting to do that for a while. So okay,
you're on TV.
Off you go. All right. So yeah. All right. So,
he's starstruck. Did you see the starry eyes? He's starstruck.
I think he was surprised. Yes. Yeah, loving what the euro is doing, loving it. I think that, this is probably going to be the main beneficiary, obviously, of the dollar index break up higher. It's really looking like it, isn't it? I mean, it's almost double topping there at the 20 moving average on the daily. And yeah, that's no messing around. Like if it does that, even that just sort of still gets it to only breaking down to the new low again. But boy, oh boy. I'm just rubbing my hands for the 110.
110 or the reverse, 113.80. We like both levels. Whether it goes up here and breaches and then moves towards this level, we've got it all trapped here. These are literally the lines that we're looking at right now in the euro. So all of these lines are very, very good, and we'll be continuing to watch those. As you guys would know, these will most likely be broken after the FOMC and after this week. I would suspect we get some volatility that pushes through one of these areas and hopefully begins some action. Pound is very similar, Ty. Big trap here. Daily, you'll notice, got that resistance kind of wicks. We've got the 20 moving average moving down. Had a lot of buying pressure off this 132 area. Again, quite trapped. We move over to US dollar yen. Again, quite trapped. If we think about this from the larger time frames, we've got that bigger resistance at 113 or 114, basically flat. 114 plus closure. Tyron and I have mentioned this quite a few times. Strong level for us. Breach of that should instigate further bullish pressure. So look, it's all about Forex being trapped right now. Hopefully some strong direction, setting the alerts for both sides, and then waiting for that follow through, looking for the day trades, the scalps, the swings once we get these breakouts. Is there much other things to discuss in the Forex world this week? I mean, if the private community has some questions and they want us to look at some currencies, we will throughout today's session. But in general, that's the way I'm looking at it. Ty, your thoughts?
Yeah, I think the currency markets are well and truly trapped. There's no question about that. I think there's some good scalping inside them. I think we just have to basically play the levels. I think you need to know where your levels are and make sure that when you are trading, you've got enough movement on either side, really, to depending on what direction you're going, to get a reasonable move. I mean, this it looks like it wants to break higher, doesn't it? Like, look at that. Like that's it's teasing us.
Got some nice little rejections. You've got a series of higher lows, Ty, going into this resistance. It is teasing, but until we have confidence and confirmation, what can we do? We'll move over to some of the commodities, and frankly, some of them have been disappointing. Gold, disappointing. And they haven't really done anything for us yet. We do have our key levels, but gold
it's testing that bottom, isn't it? You know, I think gold's D-Day is coming. I think gold's D-Day is this Friday. I think we're going to know a lot about where it's at once this week's news is out of the way. And it's either going to hold at this level or if it's going to go blasting past 1800. So yeah, realistically, I think it's just a little bit more patience on this one and just letting it. It's certainly trapped. There's no question about that. But we do know that it's at a fantastic level of support now. So, you know, this is the level we probably didn't really want it to get to, but here it is. So it's make or break for it now. And, you know, and this is the week for that make or break. So looking forward to seeing how it plays out. Definitely looking forward to seeing where this is at early trade Saturday morning, that's for sure.
Yeah, so look, gold's one of those ones where patience pays. And we say this a lot, patience, discipline in trading. Not getting in before we get the confirmation, frankly, it's boring, okay? If you're waiting for these larger time frame trades, sometimes it is boring. We don't have a trigger yet. If we get above 1792, that's going to be a first initial scale in trigger for some people. 1810 is the real level. Past that, of course, it looks very, very good. And for the bears, well, they're just trying to get it back under here. Something like that 1758 plus breach low will be a big deal, and that will lead the bears to probably try to push it all the way back down to something like a 1720 Tie, the next level of major support. That would be bad, but it's the reality of the situation. Remember, seasonality is one thing, but if the TA isn't coming along with it and isn't showing us the right signs, we can't get into the trade. It's TA first, seasonality second. That's the way we really think about it. And a lot of people will know from the private groups what we're talking about on that kind of action as well. Now, what other things have we got going on, Ty? Well, we do have US oil and Brent. What's going on with those? I feel like it's kind of like a big, giant downtrend that it's trying to breach through. It's done some good steps in the last couple of days. We've obviously had our low. We've breached that, hit the first point of resistance over here, and then we've started signaling down. And we've hit the previous resistance, becoming support. But just like we always mention, if we're going to come back down to this twice, what do we need to see, guys? Break of 71, create a double bottom here, breach that trend line, and then happy days. First scale in, second scale in, somewhere around that 73 from the price action standpoint, and happy days after that, 75 plus. And we're looking much, much better. So US oil, another one poised for greatness. It just the question is, can it get up and breach past this trend line, put in the double bottom base, and then start the recovery road? What are your thoughts, Ty, here for oil? Just floating around the right zone, but not good enough yet?
In the right zone, but not good enough. You'd have to be a brave son of a gun to be trading it right now and picking a direction, because you'd be absolutely guessing. And yeah, yes, can it happen? I mean, of course it can, but I want to see evidence and plenty of it. And I'm not so sure we're going to get it before Thursday and Friday, really, to be honest. I think tonight's probably going to be a very lackluster night on the trading front, just simply because of anticipation and waiting. Like, why would it go?
Oh, well, the FOMC statement later on in the session may push us through. But
later,
only that.
That's 8, isn't that? That's late, isn't that? Yeah, that's
2:30
like
p.m.
ET.
Yeah.
Yeah,
so
like it's nearly our morning. So if you're going to stay up and trade all night, if you're in Australia or you're in the US or Canada and you want to trade the morning, it might be just a little bit boring in the first little bit. So I'd suggest you go to the beach, kick a football around for a while, have a coffee or a latte, and then come back around that. Definitely after the FOMC, let that first bit of news get out the way, because the market's probably going to be really crap until then, to be honest.
Let's by the way, guys, if you haven't already, smash that like button. Does help us out. Make sure to give us a like on this channel. It pushes us through a little bit as well, and it makes it more people see the content. And of course, this is our second channel, so we got past 1,000, which was momentous. Thank you very much. But if we can get that like, it will help us out. Ty, we've been talking about this trade here in the rooms, and we chucked it in chart of the day a little while ago from the price action standpoint, from the technical analysis that was really solid here, and that is BHP. Now, this is an Australian stock, but it is traded on the American market. And we just wanted to talk about accumulation, because I think this is what a lot of people are missing right now. And sometimes it's better to get involved in the participation zone or when you have more clearer story than it is to get involved in trying to pick the dip. A lot of people tried to pick the dip on hyper stocks recently and have been obliterated. Some stocks like Barber just haven't turned around. And actually, like, if you went and asked someone like even the Wolf of Wall Street, Ty, he was a big fan of taking the participation clip. And whether you like him or hate him, he did actually make money in these kind of areas. And that was something that he usually did. He'd ramp it through a certain level. And then when it got through that level, obviously they would trade for this kind of little portion of the trade. They would look for this participation zone. So that's something that we like to do as well. And when you have accumulation bases, it's very strong. So we mentioned this for a good reason. It's a solid backup kind of trade. If you ever see this in the future, it's always very, very quality on blue chip stocks. So that is big, large companies. Very solid. Volume, basing, cross of moving averages, resistance breakout after a big crash, and of course, left-hand side support. We love it, don't we, Ty? This type of thing.
Yeah, that last time that moving average cross was back at $50. Like, you're talking about, effectively $9 away from, the current price. So you can't be ignoring that. And BHP is that's as steady as it comes in Australia.
Now, another thing that you can bring into your analysis here is, well, it's all great and well, isn't it, that BHP is basing, but is there anything else basing? Well, it turns out, of course, you also have the sector basing, material sector in Australia. Here it is, resistance, support, breach at the same point in time. And actually the material sector overall has done better than BHP so far in terms of recovery. And that's because there's a lot of more hyper stocks there that are trying to get back to fairer value. FMG, just to name one of them.
Look at that roll reversal zone. My goodness.
Yeah.
That was Christmas come early.
Well, it's exactly what we're looking at in these markets. Remember, it's bringing together many things.
Yeah. If you wanted to queue on BH, I mean, someone was asking in Discord about correlation and checking the you want to check the correlation, check the sectors, and then see if one of the stocks is lagging behind, and if they are, it gives you an opportunity to certainly jump in and check that out. But that's amazing. I mean, it's really, really clear. You can see that the roll reversal is there and the stocks have played and followed suit. So very, very important when that happens. And as you can see, it's almost, it was pretty much a double bottom too, really, when you look at it. And this is a weekly chart. This is a no-nonsense chart too.
Absolutely. That's a double bottom.
We're not mucking around here.
Made.
This is no 5-minute pansy chart. This is a serious chart.
Absolutely.
there it is there on the daily. And Eve Adam double bottom, happy days. And the retest. Oh, goodness.
Yeah. So this is the type of thing that you do want to be kind of analyzing, and it just shows time and time again what we're talking about when it comes to really bringing together what no one else does on YouTube, is my belief. And that is really discussing sectors, really discussing stocks, bringing that stuff together. In many ways, Ty, it's an underpinning of the private group
Absolutely, it is.
mentoring that we're doing. And
Yeah.
if you want to do that in 2022, you guys got to do it. I'm telling you, because we filled spots in January. They're gone. They're done.
January's gone.
But,
Yeah,
but
January's already
I
gone.
get pretty crazy. I get pretty crazy in those
Yeah.
webinar those sessions. Anyone doing it, Dave, if you're in here, and a few other people, I get pretty passionate because it really is what we do, and that process. It's not changing the game in terms of.
I think I don't agree. I think it is changing the game, actually.
Well, it's changing the game in terms of way you think about it.
It's changing the game because people are getting a chance to learn what we actually do in the real markets, and combining all the necessary tools. I think that's the game changer. No one else does that. And you know why half the YouTube people don't do that? It's because they actually don't know how. It's as simple as that.
Yeah, they haven't necessarily. They haven't been around for 12 years, and they
don't do it. They don't actually do it. So that's if you practice what you actually do, it makes it a hell of a lot easier to actually teach it. And that's why we're so damn passionate about it, because we know it works. We do it on a daily basis, and when we see people succeeding, that just gives us so much excitement, because it's our way of giving back, and seeing people succeed is just so damn cool. And we get to see that every day. And people and your whole community, we really appreciate you, because we know that a lot of you are getting better and better and better all the time. And it's just so pleasing to see. We are doing the ASX 200 for Jessica. Hi, Jessica. Yes, sure. Look, still channel bound for mine. It's not going to be really getting my attention until it does one of two things. And you know exactly what I'm going to say, Jessica. It either has to break the 74.70 with a daily candle at least, or it's going to break the 7,200 with a daily candle at least. Until it does one of those two things, this is absolutely dead set range bound. And although the range is good enough to trade, we're in an area, or a time of year, if you like, where you just have to be a little bit careful, because it might find itself a little bit stuck. Okay. Now, if we were going to get the Christmas rally happening, like we've worn our hats and we're trying to make it all happen, if it does start to happen, we would think that the push would be up to the higher side. Okay. So that's probably the expected move if we were going to go on the seasonal. I'm not convinced, and I'm not convinced. I'm pessimistic as a rule. Until it does it, I'm not going to preempt it. Okay. So although that's the expected move, I certainly wouldn't be saying I'm going to go long from here, because that's where everybody thinks it's going to go because of the Santa rally. I would want price action to show us the way. But in saying that, if we get either of those two daily candles, I think that we've got 200 points either side very, very easily. We're going to explode up to 7,700 or 7,650 on the upside, or we're going to explode down to 7,000 in an absolute heartbeat. Okay. So as much as there's a bit of a waiting game here, I think if we get those daily candles at those key levels, it's going to be, a very, very sexy period for the ASX 200.
Yeah. I'm excited for this. I'm pretty excited if we do get breaches either side. I think it's quite nicely trapped as well. And a lot of it's going to be dictated to by the American market as per usual. So we'll have to find out what goes on there. But it is interesting. A few weeks ago, everyone hated iron ore. They hated everything. It was all Evergrande's going to be terrible and all of this. And it does show you that while Tyrone obviously goes with, we need to show the price action, it also pays to sometimes be that look at the price action, but also be able to cut through. Like, is the Evergrande situation being dealt with to a degree? Is it going to become a big problem in the future? Probably. But right now, we're trading the here and now. And the here and now, we've got to put all of that news aside, look at the price action, and it's showing us, wow, we've got accumulation base. We've got a strong material sector. This is looking way better. And then, of course, you have to pull the trigger when you've got opportunity like that. What do you do? All right, we've got here, Ismo got a question here for BMY. Shows a nice breakout of a downtrend, may be interesting for the community. All right, well, let's check it out, Ismo. Let's have a look here. This is BMY, Bristol Myers, and we have a, pretty good breakout occurring here. Now, Ismo is pretty good at finding these. There are ways and means of scanning for these types of things as well. That are quite accurate, and you can find them and then start to assess them. Now it's coming into the resistance, so I feel like it's right on it. The pre-market's trying to get past, probably around $60 plus is the true closure above it. Let's have a look at the weekly as well, see what weekly did. Interesting. So look at this. We've got a bullish hammer followed by what looked like a bit of a rejection candle, and then it's just slapped that straight in the face with a nice green candle. And if that green candle gets through this, while there may be pullbacks, overall, this is showing very strong price actions in that tie. And that's like a max pain. Basically, it's a fake out towards the downside that's been instantly met by buyers. And I'm sure many retail traders got absolutely clipped here because they didn't, they bought this support without waiting for that turnaround story.
Yeah. And I think you're right. It's right at the level now where it's make or break for it. If it gets and closes above that 20 moving average in that little area there, then it opens itself up for a pretty decent run, doesn't it? But again, it's not one of those ones you want to preempt. You need it. We need this to happen. Let it happen before you trade it. And then you've got plenty of movement on the way up. Momentum. The peons. The peons, I think, is another word for 2022.
That's it. In 2022, we're going to have a Warcraft session.
It's all about peas. It's peons.
I'm going to show
patience.
you how my peons work really hard to create the structures faster than your ones. That's what we're going to do.
Do you know what's going to happen? You know what is going to happen in 2022?
Just
for all of you in the Discord room, what's going to happen in 2022 actually is the Discord room, the chat portion of it is we're going to have our own peons actually contributing to the room. It's going to be bigger and broader and cover a lot more ground. And there's going to be a lot more activity happening in there. And you know what? When the markets are quiet, maybe there will be a game of Warcraft 3 playing in the background. I don't know. I can't promise
live streams in the Discord.
Live stream Warcraft 3. I mean, that's something to look forward to. I'd be pretty happy about that while I was waiting for the Euro USD to break a certain level. I can tell you that. But we'll see. But that's going to happen. Look, peons and patience are the key words for 2022. Be patient when you're placing a trade and let the peons break down the levels before you go in there and risk your own money. Okay? That will lead you to a very, very bigger gold mine. I was just trying to put it into Warcraft speak. You're going to have a bigger gold mine.
Probably a lot of people have no idea what you're talking about, but that's all right. I assume some people will. We've got a question here about Coca-Cola. Actually coming good, this company finally. 57.93. Nice closure could be present here on the weekly. And this has actually come off a base. It's a decent return in only a few weeks for Coca-Cola. 10.81%, 11%. It's kind of like based. It does look like it's ready to continue up here. And it has been underperforming for quite some time. It was actually one of my picks for the back end of 2020. I guess it's done okay. What has it actually done? So this is what I liked. I liked it here. So September. So let's see if it's actually even beaten the market. Ugh, but basically the same. So the SPX and the Coca-Colas have pretty much done the same type of thing. But this is one that I do believe is breaking out, and it does look quite strong. The rallies can be fairly sustained, but I guess I would look at the left-hand side here and say, well, how sustained are these rallies recently? This has been a good rally, but when it goes energetic, it does tend to have a little bit of weakness afterwards. This energetic move is what it's got me a little bit concerned. Maybe around here, we wait for it to come back down and then try to see a lightning bolt and get a bit better entry for a risk reward. Because where you're going to place your stop loss here is the biggest problem. Yeah. An investor might go, okay, yeah, I'm ready to buy it. But someone that's placing a stop loss, I mean, you're going to need it underneath here at this stage. And I'm not sure if the risk reward is going to pay off.
Not from the present target.
No.
Yeah, not from that previous target.
Because you're looking at about $60.
Yeah.
And then there will be some resistance there, surely, all-time highs.
Yeah.
You'd think there's going to be something problem there.
Not unless Coca-Cola have got something that we don't know about.
The new version of Coca-Cola, sugar version 2.0, Ty. It's going to be like Red Bull, but Coke's crazy version of it.
A weight reduction Coca-Cola. Drink it and you will lose weight.
Oh wow, yeah, like a Coca-Cola weight shake. Yeah, that would be pretty wild. I don't think they've got that. The problem with Coke is they keep buying all their competition and then destroying the brand. I mean, how many times they've done that? So many times in the last couple of years, and it's partially to keep everyone else down. But I always think about nutrient water. That's the one that, remember that nutrient water? That was terrible. That stuff.
I don't know how. So we've got a thing.
I don't either. So we've got here J Rocket coming in. Hi, Tom. What about Crowd? CRWD. I will check that out in a second. And Laurie also says, hi, guys. Is SoFi toast? So, yes, it may be. Let's look through a couple of different stocks. We'll go back over to the list. Let's do these very, very quickly here. So we will do Crowd first. Now, Crowd is one of my pretty big favorite industries, which is cybersecurity. Crowd's kind of a tough one because it is priced incredibly highly by any metric you look at. We do have also usually more support around this 170, 180 zone as per the left-hand side here. And we've fallen off substantially in terms of price valuation. Now, the pre-market's sitting about 199. Is this a decent level? I think if you're investing, it's certainly open. I mean, you're getting a discount now top to bottom. Let's just have a look here. Top to bottom, you're getting a discount around 34%. So we know, though, it's a hyper stock. So I'm not sure if it's a great trade. I think when you're looking at this type of stock, we need to be able to assess trades versus investments. And when you're thinking about trading, I generally go with the rule, if the company's been around for a long time on the market and it has more consistency, more stats to do with it, more raw data, I prefer to trade that one. More of a blue chip approach, like an Apple or an Amazon or, a Coca-Cola or anything like that. Whereas with a Crowd, I prefer to pick it as a company and you find key levels to invest in. Does that make sense? Tyrone, I think it's a big deal. People are getting into penny stocks and then thinking about they're going to trade them, or even these companies that have come out of nowhere in the last couple of years with less than 5 years of data. They're great companies. Don't get me wrong. I love CrowdStrike, but I think it's more of an investment than a trading stock. What are your thoughts on that one, Ty?
Yeah, no, 100%. No, totally agree. And understanding the difference between trading and investing is going to be your best friend moving forward. There's no reason why you can't do both. You can absolutely do both, but you need to be aware which one you're doing at each particular time. I think that's probably the most important thing. Jessica asked a question. What's a peon? Is it imbecile money or big fish money? I'm going to probably term it the uninformed money, Jessica. It's the people who don't really know that they're breaking down a wall. Most people who are going into areas that they probably should be concerned about generally don't know that they should be concerned about it. So it's the uninformed money. It's certainly not the smart money. Imbecile money is a bit rough. It's a bit tough. I don't know about that.
We don't call anyone that.
It's the uninformed money. It's the money that people don't realize that they're trading into danger. Okay, so definitely not the smart money, but the money of the uninformed or ill-informed. Hopefully that helps.
So here's the key levels that I would look for in Crowd. Now, another one that's been a
3 cases of Coke a week. Jesus.
Easy done. Yeah, actually, my dad has a vet friend. He does that. He drinks Diet Coke and he drinks about 3 or 4 cases a week. Yeah.
Goodness.
It's crazy, yeah. But he's done it for years. I mean, that is a really scary habit. This is SoFi, Ty. Look, another kind of not long-lasting stock so far. It hasn't even, it's just been on the market for a year now. And is it cooked? Is it kind of gone? Well, it's at a level of support. It's very dangerous. Look, I mean, like anything here, the increased level of volume, a few weeks ago, everyone was calling it to go to the moon. Every single channel was like SoFi, the next 100x, the next 20x. We don't get caught into that type of stuff because it tends not to be true. E.g., space, terrible stock. And
this is one of those ones you've got to be really, really careful too, because you're going to be tricked into thinking that this might be the level of support. It's going to take it all the way back up to $23. And it may well be, but it's not one that there's not enough history here for me to rely on this level to say I'm buying this or, I really think this is a good investment at this point. I would let it prove itself. And by doing that, you know exactly what we're going to say. Lightning bolt off this level on a decent time frame, and then you've got a very clear target. Double bottom, lightning bolt, inverse head and shoulders, take your pick. Any of those, or Wyckoff, any of those methods will give you momentum shift. And if you get a momentum shift, then I think you start trading it long. But I think it's a very dangerous game to just preempt it and expect that this level will hold up on something that hasn't been proven over a long period of time. So just be very, very wary, Laurie, on this one. and let the price. And you know what? You've got a shit ton of upside, heaps. So realistically, if it does do the double bottom for you, or you get the lightning bolt of this level, the upside is mammoth. So don't rush into it. There's plenty of time.
Basically 100%. Yeah, that's how much is there. Net was another one that was just bought up then, Ty. This is like CrowdStrike, overpriced action. Love this stock a lot. I love it a lot. We use it on the website, Cloudflare, very cool. And it's come back down. And you know what? I like it at these 110s, these kind of zones. But I was never won away with this. I thought it was insane at this point here. I said to quite a few people, there's a few people probably in the room that know I said this was insane. And I maintained it was insane. And now we're seeing some reality. Now, it doesn't always happen like this, but this stock really ran. I mean, that was an absolute, monster run away from the moving averages. A 20 moving average got flogged. It went super far away from it. And when it's done that in the past, learn from the left-hand side, it's run hard, it's sat for a while and moved back down. So we could see this coming down even further regardless of market action. And it's getting back into that tasty zone, that 130 into 110, maybe even $100 all around here is very exciting for net, but this is more the price action. So we're looking now, as Tyron would say, lightning bolts, double bottoms, the turnaround story. Can we find it? Hopefully we can. Let's go through a couple of other stocks, Ty, because a few are basing and some of these are favorites of the community here. Things like Square. We still don't have a full base on this pre-market here, 169. So we need to breach past these resistances. Will you be giving up some profit? The answer is yes. Will you be giving yourself a better chance of actually being correct on the bottom? The answer is absolutely yes. Way higher percentage. You're talking so much higher percentage of being right when you're finding those accumulation bottoms. Think about the BHP trade. If you were patient, you get a great trade. If you were impatient, you bought the dip somewhere in the middle and you're still not even in profit. So patience does pay a lot of the times on these. And that's why we said in the previous webinar, discipline in 2022 is the big deal. Square's one of those that's come down. Another one that we'll look at, Amazon, if it can base here and then move back up, there's plenty of good profit to be had should we close through 35.50. And I mean, that would be a fantastic base, wouldn't it, Ty? It's coming off a massive trend line, coming off the down. We move up here on Amazon, all of a sudden, happy days. But we just have to see it happen.
Yeah, you got to let this one unfold. If it's going to, it's time to shine. Is probably now. So I'd like to think that you're probably going to see that bounce. But it would be a good trade if it does that. Definitely, definitely. We've got a question on AGL, Tom. AGL.
That's got to be Kim.
No, it's actually Jessica. She says
really?
that her sister works there as a GM. Any thoughts, Jessica? You probably should be telling us.
What are your thoughts?
There's a GM.
Have they decided not to change the company into two different versions?
Yeah.
That was so stupid.
Look, I tell you what. Let me tell you something about AGL. I am starting to like it. Okay, this is the first time that we're looking like we're going to get a moving average cross. It found a very, very, very low base. This is not one you wanted to be picking the bottom one. I can tell you that. But in saying that, though, this is an Adam Eve double bottom. The second trough has had a lot of time to think about this level. Okay, a lot of time. Volume. I'm not sure if that volume spike is real, but gee, it looks impressive.
It is real. It's because one fund sold to another fund.
Yeah, but look, it's one of those ones where I'm not a massive fan of AGL. But I am a fan at $5.50. Okay, so when it was down there, that was a bit sexy. If it comes back down, if we're lucky enough that we get another entry point on it, full disclosure, I've got a couple of option trades on this one, and that was because we were quite happy to own it under $5, which is effectively what we bought. So it's pretty good. But in saying that, though, I would like to see it break that level of 628, and then the upside is huge. What I like about AGL probably, and this is where fundamentals come into it, we know that its assets are worth far, far more than its price. Okay, and that's a very, very important thing. Can that be said about a lot of those speculative stocks that go through the moon? And this is one stock that if it had to be bought out, what price would it have to be bought out at times? If someone came and took it over, to buy at asset value is about like $9 or $10 or something.
Yeah, probably say about that 8 to 10. Yep.
So trading well below its actual asset value. Okay, so that's a very, very important factor, that even if this thing went bust tomorrow, if it sold its assets, it would have to be, if someone came and bought it out completely from underneath them, they're going to have to pay about $9 or $10 for it. Okay, so something to keep in mind. It's not always, that doesn't mean you should go jump in and trade it, but you can definitely trade it with a little bit more confidence knowing that, I think. And I think that it's starting to show the signs now that it's reached a level where people are certainly giving it a bit more consideration.
And we've only ever found this twice in this entire terrible downturn try. We had one over here where we got a little excited about it, and we obviously traded that to the role reversal level. We spoke about this. God, if you actually go back through the webinars, we did literally talk about it. And we saw one over here which didn't ramp and ended up just hitting the break even. So look, there's been some opportunities to have a go at it, but you need to be aware of what you're doing and how you're doing it. This is the first time we've seen base for a long time. We've got a weekly 20 that's coming up that's never been breached in this entire horrid downtrend. And this has been horrible. I mean, this has gone from 15 down to 12, down to 10, down to 0, basically.
That's pretty funny.
Very close.
Dave said that that volume spike was when I opted in. Actually, I think that was probably when Thomas opted in. Let me tell you like a little story. It's actually funny. Can we talk about liquidity? I think we were talking about liquidity in the previous webinar, in the Purpose-Stone webinar. And you guys are probably going to think we're lying, and yeah, whatever. We don't really care. But there were times when we were a little bit, when we first started trading really, really big volume, that we would get the phone call from whoever it might be, giving us an ASIC speeding fine because the volume levels that we were putting through on particular stocks was so high that it was actually upsetting the market makers. And you may not believe us, whatever, I don't care, but it's true. And you are Thomas's the first time Thomas got that call, he was like panicking. He's like, oh my God, we're going to get the feds knocking down our door. But we quickly learned that when you're putting massive volumes in at once, and when I say massive volumes, we're talking about like, depending on liquidity, like a stock like say Telstra or one of the bigger banks, they can absorb like $1 million or $2 million trade like nothing, right? Like it's not going to be a problem. You can place it. But if you try to do that on even some of the bigger ones, like if you try to do it, say on a Woodside Petroleum or a CSL, these are top 20 stocks, right? If you put if you put $1 million order in straight up, you could wipe out 10 or 15 cents worth of lines. Okay. And ASIC do not like that. The ASX do not like that. No one likes that. So in fact, most brokers will stop it. And you'll get what they call a speeding fine, which is
basically you don't get DTR no more.
That's right. That. So it is actually quite funny. But no, that's what it reminded me, that volume spike. But no, Dave, that was certainly not us in any way, shape, or form.
All right, let's power through a few other ones here, Tide. So there's a few stocks I want to look at. Basically, we have a whole bunch of these hyper stocks all hitting big lows. SPLK actually was up a lot yesterday, I noticed, after the market. This is another one, 120, 121, double bottom potential here. Bit of indecision around these lows, previous buys. You can see the potential should it start doing these things. There is potential all over the US market in plenty of quality stocks that have been really beaten down over a long time. I mean, you look at it almost anywhere, you're starting to see these kind of lows that are starting to find levels where, like, say here with Beam, 80-50, big previous support becoming resistance, lightning bolt action could be in place. TDOC, a horror, of course, also showing the signs that there could be a double bottom. We don't want to preempt it, but they're all there. Now, I'm not saying TDOC's a good one because we know that's scary, that thing. But yeah, a lot of these, DKNG, another one that's coming back down. If it turns, all of a sudden, you're getting to a good point. PayPal, finding pressure. And remember, PayPal's not dropping like Square is right now. It's already had its horrible drop. So now it's trying to consolidate at the base. Notice what the volume is doing. The volume is staying high. This entire drop, there's been a lot of transactional volume, and it's uncharacteristic for the stock. So what does that look like? It looks exactly like the BHP style position, the uncharacteristic volume that continued through the base. Someone's buying it. and someone's selling it to them, but there is still volume here. Very important point, isn't it, Ty, when you start looking at the bases?
Most definitely. Yeah, and that's why I think we're in a really interesting time of year. I think that we are setting up for a lot of what's going on, what's going to happen, early next year. I think we're going to see some of these breakouts, and they're either going to reverse or they're going to, basically shit themselves and keep falling. Which one is anyone's guess, but I certainly wouldn't be taking a punt on it. But if you get that confirmation, like BHP, and the sector starting to improve as well, then you're getting far more evidence, to really base your claim on that long, especially if you get that support. They're all looking very similar, aren't they? Like really, a lot of the ones we've just looked at now are almost identical.
Yeah, they all of those ones are. And at the same time, you're actually getting breach outs, which is actually seasonal for things like utilities, consumer staples. They're actually starting to perform better in this month while technology is rotating out. So a lot of people are very negative on the markets right now. We'll go and have a look at the SPX and give our thoughts. But I'm not so negative. Tyron, probably him and I, maybe even partially, I don't know if we agree on this one actually. But my thought process is at this stage, we've got the gap closure. I like this 38.50 zone. This is where if the bulls are coming in, they are coming in fast. They have to go here. The FOMC be damned. They must hold this zone up because we close underneath this 460, and Ty will agree on this one. Back down, we go to 450. And if we get underneath 450, that will actually probably make Tom a little sad, okay? It might even make Ty a little sad. I'll have that looking face because really what that will mean is they've got the first weekly closure underneath the 20, and that would be really bad for this S&P. So we don't want underneath the 20 if you're a bull. None of that.
Not if you're a bull. Not if you're a bull. I think I think a little bit of weakness is not a bad thing, but you don't want it to the point where it's going to really start to, I think 450 would be a nice level. I wouldn't mind seeing it there, but I'd like 450 to hold because we don't want panic. Yeah, we don't want panic.
So you're going with the 450. I'm going to go with let's hold the line at 460, baby.
Oh, is this Christmas prediction week? I didn't know that. All right, all of it.
Well, no, I'm not saying. I'm saying where we are with FOMC. What do you think? Do you think they're going to go? No. Do you think that the market's going to be a fizzle and then it's going to go up?
No,
you think so?
I think it's going to be a fizzle.
Fizzle, go down.
That's my
fizzle
that's
down.
my
Fizzle
opinion.
down or fizzle up. Let's go. I'm going to go fizzle up. Why not?
It's going to fizzle. I think it's going to fizzle down. I think. I said it earlier in the Pepperstone one, but I'll say it again. When the year has been so big, I don't think we need a Christmas rally, and I don't think the big fund managers need a Christmas rally. I think that their window dressing is well and truly done. So I'm going to go with her. But that's just an absolute. We don't know.
Are you saying they're getting a lobster dinner?
I'd say they've already had their lobster lunch.
Lobster dinner.
Yeah, we don't know for sure, and that's exactly why we're waiting for price action to confirm it. But I think that the thing is, when the market needs to move to a certain level, it actually makes no difference what the FOMC meeting says. It makes no difference what the numbers that come out of non-farms and all of the other bits and pieces say. They're going to get to that level anyway. So in my mind, it's probably going to be somewhere between 470 and 450. But if I had to absolutely, break into Thomas's wallet and use his money to trade it, I would trade it to 450.
Oh, okay. I'll go with the optimism, guys. I'll go with 4,600 plus 460 up. Let's go with optimism. Come on, Fed. Papa Powell, bring out the big guns. Say, we're not going to raise interest rates next year. Come on. What? Bring the Christmas cheer.
Dead set. If that thing's down at 450 next webinar, I'm going to wear a Grinch hat, not a Christmas hat.
You need a green one.
The green one.
The green one. You eat some green. Was it that green eggs and ham? You can eat that on there. All right. So we'll move over to the crypto markets to finish up. Basically, the FOMC will find out which levels are broken. We know it's a long leg doji on the daily for the SP 500, so the market has no idea where it wants to go either. No. BTC, that's all I have to say, really. What is this market doing? It just sucks. I mean, we had a nice little closure on the 8-hour, but we need to breach more action. And this is kind of like the BHP scenario at the start, and it's why I used it for today's lesson. Because here we have a nice base. We obviously have that maximum kind of random volatility, but we are starting to see some recovery. It is coming down on a bit of a slope. So if we breach this, first sign of positivity, similar to the oil trade, And if we breach past 52K, well, then you can get your smiley face out and feel good, because that's going to be a full-on base in Bitcoin. And whenever we've seen full bases like this, EG over here, or EG when it broke through here, or any of the other really nice recoveries we've seen, similar to these double bottoms, that's always spelled very nice rallies.
Yeah.
But if you want to be patient, you wait and settle.
You got to be patient on this one, because I'll tell you what, if it doesn't break that trend line and it fails there again and tests that base, that's all of a sudden a very big descending triangle. And if that plays out, you're going to see a 3 in front of it.
Yeah.
So
and
that's patience. Yeah. You need patience here. So, but if it breaks it, look, if it breaks higher, you know where it's going. The 50s will be a formality. So I think it's good. It's good trading, but I think you've got to be a little bit patient and be very, very conscious of those two zones. Be very conscious of that descending triangle possibility, but also be very mindful that if it breaks that top of that triangle, that looks like what it's forming at the moment, that's very, very bullish for it. Okay, so it's just two things that you're going to be very, very mindful of if you are trading Bitcoin, if you're not already in it. If you're already in it, I guess we can only say good luck, and hopefully it does what you need it to do if you're shorting it, if you're longing it. But it could play. I'm not biased either side here. I think I'd be happy with both results, to be honest. I don't know. I think if it could do both, it could do both. I'd be very comfortable with both. I mean, they're both very technically sound. The up would be better. I think the world is happier when Bitcoin's higher.
Come on, man. Christmas cheer, New Year cheer.
Right.
How are we going to afford our presents? Okay.
All right.
Okay. We need to convert our crypto into fiat.
All right. The world is a happier place when Bitcoin's in the 50s.
There we go.
It's even happier when it's in the 60s. So let's hope that it bounces off this bottom of this base, and the descending triangle that we're seeing that's definitely forming is only an illusion and short-lived. It's not at the 2/3 mark yet, so we still have hope.
That's right. It's not there yet. Come on. We need to just get back up, break through.
If the world is happy when Bitcoin's in the 50s and it's ecstatic when it's in the 60s, what's it going to do when it gets into the 70s?
Annoying people will come out and say, "I told you so," and they're going to be really annoying. You watch the crypto fans. Some of them are going to be so arrogant when it gets to 70 or 80,000. I hope you're not one of them out there in community. Even if you make a lot of money, be humble, okay? Be humble. Don't be like these people that tell everyone else how great they are because they made $20,000, $30,000. I mean, no one cares. Like, just stay in your lane. Focus on you doing well. That's right. Stay in the lane.
I think that's the saying for 2022. Stay in your lane.
That's right. All right, guys. Well, from all of us here at FX Evolution, thank you so much for joining us for, of course, the Wednesday session. We wish you all the best this week. FOMC, quadruple witching. Make sure to come and check out our YouTube channel over on FX Evolution, the main channel, for the quadruple witching coverage. And we will be very interested to see what at least us Australians will wake up to. And if you're in the US or in, of course, the European sessions, stay tuned for 2:30 p.m. Papa Powell will come out, and he will bring all of the firepower that he needs to be optimistic in the markets. That's what we'll go with. All right, Ty, what do you got to say to the people?
I want to say to the people that if you are coming to our conference in March and you are wanting to go on a fishing trip, I've got a little visitor here again. What's up, Aiden? I think he should be in bed. Yes, absolutely. He should be in bed. If you want to go on the fishing trip, this is one thing that we need to say. Those spots are filling in so quickly that Thomas is actually claiming all of them. So you got to be really, really careful.
That is true. If no,
in all
seriousness,
seriousness,
don't fill them, I'm going anyway.
I know we say it a lot. I know we do say it a lot that the spots are filling, but I'm telling you, there is literally only 6 spots over 2 days left. So if you actually want to go fishing with Tom on a day charter, definitely let Tom know straight away, because those spots are going to be gone probably within the week, because there's about 60 or 80 people going to this conference, and only 6 of them are going to go fishing with Tom. Okay, because that's just what the boat takes. Yeah. There's just no other way to say it. The boat only takes. Is it 4 people? It's 4 people at a time, isn't it?
4 people, yeah, but I'm going.
Yeah, so literally, and Thomas has booked his spot on both boats, so he's going on both days. So you'll be with Tom all day. God help you. So there's only spots for 3 people, and I think a couple of them are already actually gone. So if you want to go fishing, in all seriousness, that's one of the ones that's selling out extraordinarily quick. Let Tom know straight away, okay? And we're going to have an email coming out very shortly with the other activities for diving, Daintree, and golf. So there's going to be a lot more room on those ones, of course, but the fishing one is the one. Aiden is dancing in the background. I don't know what he's doing. He's dancing on the camera. But yeah, the Christmas cheer has definitely hit the Abella household. You can see we're doing it from home. I'm quite happy, and I've got a dancing child. So look, that's about the only housekeeping we've got to do. We have got another webinar next week. We're going to do our final one for the year on Wednesday. Okay, so keep your eye out on that. Q&A tomorrow night, of course, and Friday morning we'll go over the results of what happens in the FOMC tomorrow night and see what gives for the market. But thanks again for joining us, and we look forward to seeing you very, very soon.
Oh, and just so you know, guys, with the fishing, it's GTs, reef fish, and I believe mackerel. So it's all three. We may focus on whatever's doing well for the day, but yeah, it's a bit of everything. So it's going to be a lot of fun. Thanks so much, guys. We'll see you next time. Bye for now. Catch up.
Thanks, everyone.